All right, and welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you like the content, give the video a thumbs up, subscribe to the channel, come find Jason on Patreon, come find me on carnivoretrades.com. If you're interested in swing trading alerts and analysis, taking several winners this week, adding to an already awesome year. Anyways, what a move off the lows here in the S&P 500 and NASDAQ broad indices up big time. S&P 500 up 6.5% for the week and up over 9% from the low pivot going back to last week. Take a look at some of these names here. Big gainers. Tesla up 140 points from the lows. Look at the 3-bar surge here. Wednesday, Thursday, and Friday. Apple up 17 points from the low. Kathy Wood's fund, even like these beaten down growth plays, are starting to get a bit here, up 29% from the recent lows here, the year-to-date lows, the 52-week lows on ARK. And, this is why both bulls and bears can get eaten in a bear market because of these massive short squeezes. You guys know I've been kind of calling this for a couple of weeks, saying, we're getting oversold. We're getting to the point where the boat is really overloaded to one side, and this rally has really not disappointed here. And you might ask why. The Fed's doing quantitative tightening. There's geopolitical problems. Oil is, near multi-year highs. Gas is at these highs. Guys, the market prices this stuff in, and eventually the market makers are just going to say, oh, enough is enough. You guys are going to short the lows again. Well, we're going to rip your heads off. And, a lot of these amateurs and pikers, they're listening to CNBC and everybody's telling you to sell down here. And that's when you get these short squeezes. And when everybody gets loaded to the boat on one side, typically the market does the inverse of that. And it's just a matter of time. And, the market knows this. The Fed has been telegraphing everything it does, right? The Fed doesn't just come out one day and say, oh, we're going to hike by 50 basis points. They telegraph this stuff weeks, if not months in advance, and it really gives the market time to prepare. So that way, when it gets time that the Fed's actually about to do it, the typical investor is trying to short down here, or they're panic selling, and smart money is accumulating at the lows here. And it's the oldest trick in the book, right? Sell the rumor, buy the news. So that's really what we're seeing here. But bottom line is these levels I've showed you guys, on the spiders, on the the Russell. Let's take a look here. So this 382 fib retrace, going back to the pandemic lows. I mean, this is just a monster level here. The Russell 2000, I've been showing you guys this level. You got this monthly trend line going back to 2016. You got these previous highs here, and you went straight into it in an oversold condition. The triple Qs, I've been telling you guys about these levels here. So this previous all-time high and a 50% fib retrace. You guys, these levels aren't just going to get conceded. They're not just going to break these levels in a straight, especially when they're already oversold. Probabilities dictate when you're this oversold going into a multi-year level, you're going to get some type of a defense of that. And that's really, what it comes down to. And again, bottom line, you got this big falling wedge pattern here on the triple Qs. That's a bullish reversal pattern. The same pattern there on the spiders. And you can see it in several sectors across the board. The semiconductors, having these divergent lows there. The financials, even the XLF, a nice falling wedge pattern there. I've been showing you that. Broker dealers, same thing. It tried to break down here. It couldn't break down. And that, if you're not going to break down, you're going to break out. And that's really what we got there. On these charts. And when you see that, when you see these technical indicators and technical levels getting hit, and not just minor technical levels, I mean multi-year levels, and the market's already oversold again. Like I said, probabilities just dictate that it's time for a bounce. And again, everybody was so bearish, especially on CNBC and FinTwit. And when I see that, generally I want to be on the other side of that boat. And that's how we're getting a nice little short squeeze here. So this may last for a couple of weeks, but ultimately I still think we're ahead. We have some volatile times ahead, maybe have some more headwinds, but it looks like we are finally getting some type of a relief rally here moving forward. Dow transports, so that level I gave you guys held out pretty well. So that previous high there, just above 13,000, 13,200. We basically kissed that last week in a nice reversal, closing back above the red line here and above the 100 period moving average. By the way, the spiders also closed above the 100 period moving average as well. So that was reclaimed. But Dow Transport's a nice little bounce. We'll see if that can continue. But again, just another sector here, a big sector that got a nice relief move off the lows. I mean, that's, you know, well over 1,000-point move there from the lows on the Dow Transport. So a big move there as well. Rates here, so 10-year Treasury, basically kind of a flattish to lower week here, so just kind of grinded lower. We talked about this little mini head and shoulder pattern here on the 10-year, and now it's kind of stalling out at the 50 moving average. So if this starts to chop sideways, we'll look for this to kind of bear flag a little bit, and I'm still expecting this to hit that 2.5 area. So that should be a nice move there. In yields that were just really overbought, and you guys know I was talking about this for quite a while. You know, they're moving up, you got to respect them, but you know, nothing goes up or down in a straight line, and now it's starting to pull back in here. The good news for markets right now in the economy is the 30-year has not fallen as much. In fact, if we look at, so this green bar here, excuse me, this weekly bar from May 2nd, we technically did not close below that. Whereas on the 10-year, we have, you know, we closed well below that last week, and this week even with a little bit more follow through. So that means the yield curve is steepening a little bit, which does give financials a lift, and, you know, really does give the markets and the economy a lift. Speaking of rates here, I talked about this earlier in the week on my channel, but let's take a look here at HYG, and this is why I said, hey, we might be about to short squeeze here, because on Tuesday, HYG got a huge surge. And we look at, this was Tuesday's action. We had a nice reversal here on Tuesday in the spiders. It still closed negative, but HYG had a massive surge. And then Wednesday, Thursday, Friday, just gap and go on HYG. Same thing with JNK. So reclaiming the 50 moving average there on both of those. So that is a, you know, it's a really good indicator for the markets. It's just a positive sign here. I mean, high yield debt has been destroyed here for quite some time, and it's HYG reclaimed the 50 period moving average for the first time since the beginning of the year. And the same thing really for JNK. So what this was beginning of January, that was the all-time high in the markets. That was the last time high yield debt was above its 50 moving average, and reclaiming that now doesn't mean it won't eventually roll over. Doesn't mean this isn't just a squeeze here, but it's a good indicator for some type of relief here in the short term. So definitely pay attention to those. That high yield debt will tell you a lot here moving forward. Just another good leading indicator. All right, so moving on to energy here. So crude, you know, not a whole lot to talk about here. It's been so range bound, but I will say the chart has held up a lot better. So we filled this gap here. So that's out of the way now. And you do have higher lows kind of, you know, on the daily time frame. And previously, my only kind of gripe with it was that you had lower highs, which you still do. So technically, you still have 3 lower highs here on the daily time frame. But if this gets taken out, I mean, it's very close. I mean, your high on Friday was 115.30, and this high is 115.56. So really just a couple pennies, essentially, is the difference here from taking out that high. If that does happen, I give it the upside bias to probably about 120, maybe a little bit higher. And then I think there's a lot of resistance in here, so I don't think it would be able to get through that right away. But, you know, the chart is looking a lot better here on crude. And overall, it looked like you had these kind of series of lower highs with higher lows, and it looked to me like it wanted to push down to that 90.85 level, which is still a possibility. You know, it's still a possibility it could go down and test that range. But right now, as far as I like these 3 higher lows here do suggest to me that it is in better shape, and it does want to take out this pivot. So we'll see what we get here. Again, it's only 36 cents away or so. So it could easily happen on Monday, especially if we gap up. But crude is holding up okay. XLE, not a whole lot to say. You know, it's continuing to make new 52-week highs, so that remains strong. XOP there, same thing. And OIH a little bit weaker. Still well within the 52-week high, but still holding up okay. And let's talk about gasoline as well. So we haven't really brought that up. Really kind of looks a lot similar to oil, looks a lot similar with nat gas. It did come off the highs last week, and it got a nice bounce this week, but still not taking out the highs again. So we'll see what it does next week, but gas prices still remain high, and even when they come down, I feel like they go up at the pump near where I live, so I don't even think it matters much to me. But in any case, still below that 4 handle. So we'll see if it makes another run at that this week. overall gas prices holding up well. Nat gas also making new 52-week highs this week. It has had trouble with that $9 handle though historically, so maybe that is an area where it stalls out here. So you see it got above 9 back in 2000 or 2001, and then in 03, 04, and then right here in 06. So it has been kind of a historical psychological level there. So maybe that, that causes it to pull back again. It is still kind of extended. It's overbought, even though it's had some nice, pretty sharp pullbacks. But overall, considering the pattern, it is holding up pretty well. All right, let's move on to uranium here. So URNM. So like a lot of other things, if we look at for instance, like cloud software, you can see this pattern here. We talked about ARC a minute ago. So we had kind of this ABC kind of up pattern. Kind of seeing the same thing on the uranium side. So, move down here and then you put in a pivot low and then you started to flag up and now it's getting a move up. So a possible little ABC move there for uranium. And it's trading positively with the broad stock market. So if stocks can continue higher a little bit, I give this the upside bias to about 75. That's kind of where your major resistance is, this big candle, rollover candle. So, it looks like it's got some upside here in the near term. CCJ, we got about 26, 25, and 28. So those are going to be the resistance levels on the upside for that. Moving on to the dollar index. So dollar continuing to pull back. I've been calling for that for quite some time. Just said it was just way overbought. Now it's stalling out here at that 50-period moving average. Again, kind of like yields. If this starts to chop sideways here, I like this for a move down into that 100 and ultimately 99 handle. I think that would be a really good long area for a good bounce there on the dollar index. But overall, just doing some much needed backing and filling. I mean, just look how, if we look at the weekly and the monthly, man, look how overbought it was in such a short period of time. But overall, dollar holding up just in backing and filling mode, which is good for gold. And I'm actually liking the daily pattern here on gold. We had some, with carnivore trades, we did play some call options on GLD last week, and they worked out really nicely and wouldn't be against jumping back on if we can get in a nice flag pattern here. So you came down here, and then on the monthly, this is the level I was looking at really. So I was buying into this green bar low, which we tested, and we got a nice bounce off of that. And now again, we're starting to flag up a little bit. So if we can consolidate a little bit more, I like this for a move to 1900, maybe 1925. So I'm liking what I'm seeing with the gold chart right now. Silver is also holding up a little bit better here. I'd like to see it flag a little bit more. I don't like that pop that you got on Friday. I would have rather just seen it kind of just chop sideways. But again, if it's still, if it flags up and does some backing and filling, there's a chance it can move up to 23.50 in the short term. Platinum, I'm a little bit less hot on. I don't like this weekly kind of inside bar, so I think it's probably headed lower. And palladium, for me, it's really kind of same kind of deal, but we'll see if it can get back above this trend line here. And if it does that, maybe it has legs up to this topside trend line where you had this kind of former wedge pattern building up. And then copper here. So nice reversal off the lows for copper. I still would have felt better about it if it had tested $4, or possibly even 390, had some support down there. But it's, nicely off the lows. And again, like gold, it's flagging up here. So we'll see if we can get a push up to that 445 area. You got that 200 MA and then the 150 MA up at that 450 area. Those would be logical upside targets if copper can continue to hold up. All right, and then lastly, let's talk about Bitcoin just a little bit and crypto. There's not much to really cover here because of how sideways it's been, but I do want to talk about it briefly because we've been talking about, I've been talking about the last couple of months, really, the correlation or the positive correlation between Bitcoin and the NASDAQ and really the broad markets, right? Bitcoin has been a really good leading indicator as Bitcoin is a risk asset and it performs like a risk asset. And a lot of the times I would see in my videos, or I would say to my members, hey, Bitcoin just got hit, guys, so let's look for the market to go lower tomorrow, or Bitcoin got a bid, so the markets are going to get a bid. And that was working out really well for a really long time until the Terra Luna blow up and UST blew up. Until really this happened, it's been kind of range bound, and it even was kind of holding up a little bit for the last couple of weeks, but really this week, the correlation broke down, right? So, here's the 24th, or here's Monday, the 23rd, and then we've really gone lower since then. And if we look at, we'll just flip up to the SPX here, obviously we can see we've, had a huge surge. in the spiders and in the NASDAQ and so on. So this correlation may be finally breaking down here on crypto. I still kind of give it, I still think Bitcoin's got a good chance to get up to 34, 36,000 in the near term, but it's just really got to get above these pivots here at just under 31,000. And if it can do that and break out of that tight range, then it's got a shot to get some type of a relief bounce. I still think there's a ton of demand in this candle here. So even if it does dip down, I don't expect it to last. Ether actually dipped down last night and is now bouncing off the lows here. So I still think this holds here. I think risk reward, if this isn't a terrible trade here on Ether for a quick swing, because you got your stop very close to the lows. But, you know, overall, it does look like there's been a bit of a decoupling from crypto and equities in the near term, and I just think that's worth noting, at least for now. Overall here, basically what we're looking at on the spiders, what I'm looking at is I think we have upside at least to 420, 425 in the near term. And if you can do some back end filling, there is a chance for another leg up. But again, we're not looking for, you know, like I was saying, I've been calling for some type of a good relief bounce here for, you know, a week or two. And, you know, at this, you know, the whole time I've been calling for that. I'm not saying it's going to be more than a relief bounce. So let's, you know, be clear on that. You can still make an ABC up. You can still come here, flag sideways, and then push higher. That doesn't mean that it's going to last more than 2, 3, 4 weeks. So just bear that in mind. But, you know, there's an ebb and flow to the markets. Nothing goes down forever in a straight line. Nothing goes up forever in a straight line. And that's really just how markets work, whether it's stocks, crypto, bonds, or commodities. All right, guys. Anyways, I'm going to wrap it up here. Take care. Come find Jason on Patreon. Come find me at carnivoretrades.com. You guys have a great Memorial Day weekend. Take care.